Welcome to In the Money, sponsored by Flyer Financial Technologies, the company that builds cutting-edge technology designed to solve asset and wealth management firms' toughest trading workflows. In this podcast, we help advisors and asset managers understand how technology is transforming the wealth tech sector. We'll cover how to leverage technology for faster, smarter investment decisions, megatrends, and more. Now, on to the show.
Welcome to In the Money, where we are exploring the strategies transforming financial services. Today, we're joined by Benoit Fleury, Chief Product Officer and co-founder of Digit, a leader in wealth management technology. Benoit, with your deep product expertise, you're really uniquely positioned to discuss how innovation is not just supporting, but driving strategic growth for wealth firms. So let's dive in. And I think that, Benoit, let's start with this. Maybe just a quick introduction, let people know who you are and where you've come from. And then we'll jump into, I think, a topic that's going to be relevant to you, which would be elevating the advisor experience and why that's so important to the marketplace.
Yeah, for sure. Thank you very much for having me. It's a pleasure to be here. And I'm a big fan of the show, and I look forward to today's session, that's for sure. So my name is Benoit Fleury. I'm the Chief Product Officer here at Digit, where Digit is a firm I co-founded with some of my colleagues 8 years ago. I set the strategic directions for all of our product, and that means the enterprise platform where we do trading, reporting, compliance, billing, everything with that, but also the strategic direction for all of our investor tools, so mobile solution application and so on. I've been in the industry for over 30 years. I've worked for banks, hedge funds, and so on, but so I come with a breadth of experience in the financial sector.
Perfect. All right. So with that, and knowing today is really, I think, one of the most dynamic markets we've had in some time, why is up-leveling the advisor's experience with innovative technology so critical for firms? And I guess also with that in mind, what are the key business imperatives here?
Yeah, absolutely. So I think nowadays advisors fully recognize that they need to provide a great client experience to retain clients and grow their business. So it's no longer something that we need to stress as a vendor. And to be clear, this means a combination of great personal services, but also a great digital experience. That's very important for our clients. However, few advisors realize that they just cannot give a great user experience if they don't have a fantastic user experience themselves from their technology vendor in the first place. So just like one end washes the other, it's very critical for both advisors and client to be very well served with technology in order to elevate the entire user experience for everyone involved in the business. And a great analogy for that is that if you're on a plane and it's going through some disturbances, you need to put the mask on yourself first before you can help others. So that's the first thing.
How have client expectations evolved for digital interaction and transparency? Because I know, 5 years ago, 10 years ago, 15 years ago, the level of expectation around interaction with digital was somewhat different. So where are we today, and how's that compared to where we were maybe 5 years ago?
Oh, the marketplace has completely changed over where it was 5 years ago. So for investors, the story is completely different. Like, to be successful in 2025, you need to offer a very interactive experience. And the typical mistakes and misconceptions that people tend to have is they come in thinking that what they have to do is offer all their investors the same homogeneous experience, or one size fits it all, or that if they go with personalization, that personalization will come at a huge operational cost in terms of their efficiency, or that information, what client want is just more data and more graph, more metrics, and so on. That's what we think, is that there's nothing further from the truth than that. The key to be successful as in your digital engagement is to realize that you have different types of investors and that they have different needs and they're looking for different type of information, and you need to serve them the information that they want when they want it. So that's something that is very important. So what we've seen is investors that want more portfolio insights, for instance, about their portfolio, but these people, they don't need more data. They just need more information that is relevant to them and presented in the way that they can consume it. Some people are more tracking their goals. So they're interested about their likelihood of meeting their personal goals, some things that you didn't find in application a while ago. And most importantly, a lot of clients are interested in the narrative and understanding what the advisor think about the global economy, how it's impacting their portfolio, but not the markets in general, their personal portfolio. So that concept of personalization at scale is something that is absolutely critical in today's environment. So your role as an advisor is to recognize that you have different audiences, that you can't have a single solution that meets everyone. You need to tailor and configure your tools for different audiences. And personalization has to be part of your brand, the same way that your investment results are or your excellent service become. And what we do here at Digit is we've built tools that allow you to enhance your brand, to personalize at scale, to create the right experience to the right type of investors that you have. And ultimately, what we want to do is one of the things that is very different and hard for vendors to do is when you create a product for professional money managers and so on, you're focusing on efficiency. But when you're creating those products for end investors, you have to create that visceral positive experience to your product that when somebody sees your mobile app for the first time, they go, wow, this is cool. I want to use this and so
Right.
on, because you're competing against other social media platform at this time and you want to keep your client engaged. So that's one of the things that is very different than what it was 5 years ago or 10 years ago.
I have to think that for a lot of firms, that attracting and retaining top talent really depends upon those sets of tools. You know, you talked about personalization, and you know, I think there are a lot of choices for advisors to choose kind of where they want to be. Firms that have the tools they want that can help them deepen those high value client relationships and avoid some of the administrative burden. You know, how are you seeing the recruiting landscape being reshaped by firms who have superior tech stacks?
Oh, it makes a big difference. Like we're seeing it in our business because we have a number of aggregator channel. These are people that are building businesses to service multiple advisory firm, and the advisory firms are asking those aggregator channel, please give me Digit because I know I'm going to be able to run my business more efficiently. It's a core component of attracting talent. It's a core component also that if you're running a business and you have someone leaving your team, you don't want to be subject to that key people risk. And good technology is built to enable you to operate your business much more in an autonomous manner that
Hmm.
that you can run all of your operation and not be so dependent to different people, despite the fact that you're delivering personalization at scale. So, I mean, what we're seeing with our clients is even clients that leave an existing client to create their own business. They typically bring the Digit platform with them. They're comfortable with it and so on. It allows them to grow their business very efficiently. It's a proven receipt for clients.
Yeah. One of the things I noticed as I was getting ready for this is that Digit seems to emphasize this idea of institutional grade analytics.
Yes.
And so for the audience, what does that truly mean in practice, and why should wealth firms really care deeply about accessing such advanced analytics? And how does this help elevate their client experience?
For sure. So institutional analytics means three things. It means speed, scalability, and sophistication. So speed specifically, it means that all of your numbers are returned within split seconds. So, and that doesn't mean that people, when they talk about speed, they typically talk about real-time data coming in. What we find is much more important, especially for high net worth advisors and people who are building longer wealth for their clients. It's the ability to slice and dice the portfolio in real time, to add new metrics, to forecast liquidity, to do things like that, to really understand the business. But the institutional component means that you can do that in real time. So what our users are using is they use the Digit application while talking to client, and they build with the client the right narrative and answer all the questions on the fly. So that's the first thing. The second thing is institutional means scalability. So what we've seen with traditional vendors is that they work with 100, the 10,000 client accounts, maybe 100,000 client accounts. But the minute the business starts to becoming a lot bigger, they just can't handle the scale. And then it forces the operation team to split things into smaller component and so on. We're coming from a world of institutions means millions of accounts that you need to be processed overnight. and you need to be able to apply corrections to those accounts intraday as needed. And then finally, institutional also need the quality of the analytics. And the way we're thinking about it at Digit is that there's a whole slew of analytics that people need, but we like to divide the world between the past, the present, and the future. So the past is the past performance, the performance contribution, the change in allocation, any past decision that you've made, and whether those decisions have been accretive to your investors or not. The present is about the current exposure. What risk factors are you exposed to? Are you tracking your model portfolio or not? And so on. And the future is about forecasting the future, stress testing your portfolio, forecasting volatility, looking at whether your portfolio will, the likelihood of meeting goals. So you might use Monte Carlo methods. That's what we propose in Digit to actually not only know whether you're going to meet your goal, but know the strategy and what you should do at different time points with it. So that's what it means. And we think that also the quality of the numbers, even if it's a simple number, if institution means quality, and it means that your client can trust a number, and that trust is a reflection of, I mean, your investor will see that as essentially a proxy for the competence of the team. So we never want to have mistakes in the numbers that we're producing as well.
All right. Let's move on to a new topic, one of which I think that everybody's thinking about is driving scale and efficiency. Now,
Yeah.
personally, I hate the word scale. I think scale is kind of a lazy way to describe, problems or challenges you have, and maybe we should be focusing on those specifically. But think about SaaS and cloud-based architectures. How does that tangibly drive scale and operational efficiencies across an organization? And I think fundamentally transforming how firms manage clients' portfolios and their business in a more integrated way.
Yeah, I mean the you pointed out perfectly. Actually, the people focus on the fragmentation of things, meaning that you want a single source of truth so that you don't have to do reconciliation twice. Like if you have a different
Hmm.
reporting system, compliance system, trading system, and so on, that creates fragmentation, and then you have to redo the same task many times over. So you want to eliminate that. But the bigger problem that we're seeing, and that might be even from the same vendor, if those solutions are built in isolation, then they're not integrated. And because they're not integrated, then you're not really deriving great operational efficiency from them. So a typical example is you can have a billing system, you run a billing system, but you want it to be integrated with your trading system because you might need to raise cash to pay to get the fees and so on. And then once you raise the cash and run your billing, you want to produce an invoice that get automatically distributed to the client portal. So if all of those things are separated, then forgetting scale, I mean, the key point is the efficiency of your practice and making sure that the machine is running the right way that it can be run. And for us, we're finding that putting thing on AWS, where the big, like we're maintaining all of our software on AWS, where you get a lot of benefits is on security, it's on scalability,
Hmm.
meaning that if a client comes in and buys another business and the book triples in size, then for us it makes no difference. The next day we can process all of these accounts without any issues. So that's essentially what we're focusing on.
Yeah, I mean, the unification of those aspects of business are really important, from client onboarding to portfolio balancing to reporting. I mean, you hit on some of those. At Flyer, one of the things that we do kind of on that front that people find value is we have a real-time position store.
That's right.
So we can pull all the different custodial data feeds and we can sit that real-time position store in the middle of their ecosystem or their tech stack, and then everything can hit it. CRM, financial
Exactly.
planning, and in real time they can start to see the impacts of the changes they're making, or should they want to propose some things, what that would then do to the forecasting, which you brought up earlier. So I completely agree, and we see that on our side too.
Oh, for sure. And that single data store means that you have one source of truth. So if you have a correction, you make it in one place. And people, when they look at a vendor, they ask what are the capabilities, but they don't necessarily ask, well, what happens when you have to correct a transaction? What happens when you have to change
Sure.
something and so on? And that's what distinguishes a great platform from an OK one. It's the ability to deal with those exceptions and deal with it in a very efficient manner. Yes, correct.
Yeah. So if you were to look into the future a bit and reach your crystal ball, why is modern and modular architecture with open APIs really essential to building a future-ready tech stack? We see it on our end. We provide many ways for people to engage with us. They can take our tools just the way they look. They can go headless and just interact with the APIs, and they can control their client experience. So we see a number of different ways that people want to engage, and we try to provide opportunity and options. So how does Digit work with that?
Yes. So let me speak to that specifically. So first off, Digit as an open architecture, which allows us to connect different components. One of the thing as the head of product is you have to decide what you build and what you will not build. The what you will not build is even a bigger decision than what you've decided to build. And one of the great example of that is the partnership we have with Flyer Technology. Very early on, we met with the organization 3 4 years ago, and we recognized that that relationship could be immensely accretive to both you and I. And then what we ended up building is we've centralized all of our trading with Flyer Technology to the point that we even had other direct technology, direct integration with some third party broker or data vendor, and we don't use them anymore. Everything has to go
Hmm.
through to Flyer. And what that led to us is tremendous scalability. The robustness of the system has increased. The visibility on all the trades has increased. Our ability to reconcile everything has been a lot better. So it's been really fantastic. And from our perspective, that speaks to the fact that you need an open architecture. Now, that open architecture then allows you to bring AI. And for us, we see AI benefiting. I mean, it benefits us in so many ways. The first way is that our software developers are just much more efficient. Like they can produce code and test their code much more efficiently than they were before. It allows us to offer new capabilities that just weren't possible before. Thinking about a complex rebalancing operation that you can now fully automate because you know all the path that a person can take. In terms of client reporting, you can add contextual information to your report in a way that you can do that before. So AI is a game changer, but I would think that it's such a big game changer that for us, it now means that we're dedicating big budget to make sure we're integrating that within our technology, and then that our clients will without doing anything, will get the benefit of all that AI research that we're doing. The one point that I would say about AI is that one of the things that one needs to realize in our business is that we're dealing with very, very sensitive information. So what you don't want is start sending client portfolios directly to AI model and risk exposing vital and very sensitive information. So the first body of work that we had to do and that we recommend that people check is that not do you use AI, because I think everyone will use AI, but how secure is our AI? How secure is the data? Is there any risk that you might lose that data and then lose control over it? And for us, that's like before we can even get to the sexy part of AI, if you wish, we need to make sure that the security is first and forefront. So we've been working on that for several years, and that allows us now to focus on very interesting capabilities that are safe and secure for us to deploy.
Yeah, 100%. And we're, I think you're right about the compliance piece. I mean, it's a huge risk, and you've got to have a plan for how you're going to deal with it, and you've got to follow up. We've integrated AI into our portfolio management tool, and it's been a real game changer for a number of people. And we'll be kind of more formally announcing that in the next few months. But we see a lot of utilization in the portfolio management side. The ability to understand what's going on across your book of business. You can derive insights. You can help with tax loss harvesting. Right? There are just so many different
That's
ways
right.
you can just say, "Hey, show me all my accounts that have gains or losses of this magnitude." It's going to go and pull them, and so you don't have to hunt and peck anymore.
Yeah, you don't have to. And the thing is not just to harvest the loss, but make sure you don't buy the security after within the 30
Yeah.
days lockup
Right.
period and so on. So there's a lot of additional tools that you do to protect the firm that AI is really well suited for. So these
Yeah.
are all great examples of it. So it makes complex workflows a lot more simple. It allows you to avoid mistakes. And then it goes back to it's not a term like you mentioned scalability, but the bottom line is it allows you to do things at bulk with the sense of security that you might not have before, understanding all the scenarios that you've run through your AI and making sure that they're well thought, if you wish. Yeah.
A quick question, because I know that y'all have rolled out some new UMA functionality recently. I implemented one of the earliest implementations of UMA in the bank wealth space many, many moons ago. And I'm just curious, how has UMA changed in your lifetime?
I can't tell you how it has changed so much. I mean, because this is the first UMA that I've designed, but I've
Okay,
designed it completely from scratch. I mean, we did a lot of research over
sure.
the business problems that people were having with the UMA. But I think some of the things that we are seeing is that cash management has evolved, and cash management in the context of UMA is becoming more complex. So just to explain to people what UMA means is that you can now take one custodian account and break it into sleeve where you can have each sleeve follows a certain model portfolio. So what that means is that you can implement much more sophisticated investment strategy for each client, but also you can centralize your trading where your trading is done per model and you can do it at a scale down the road. But doing that, what we're seeing is that UMA in itself was easy, but then we still have the notion of, I mean, first off, we wanted to create a real UMA where you truly have a sub account to your account, and it's not just like a higher concept to account. It's a true UMA where you have sub accounts, and then you can set all the parameters of who can access what sleeve, how to do the sleeve, how to do cash management within the sleeve. And the whole process then of your passing information to your custodian and receiving the trades back and dividends and attributing them to the right sleeve and so on is something that is very important. In our case, our UMA is multi-currency, so it also deals with the fact that you might have multiple currencies that you need to deal with, and the fact that ultimately we have multiple stakeholders, so we have many different people potentially trading different portion of the sleeve. So in terms of permissioning, that's something that's very important. So
Yeah, one I can share about one of the UMAs I've implemented over the years is that we had clients who were getting stacks of client paperwork when they would come in. An advisor would sign up a new client and they would pick two or three strategies. Well, they'd open two or three accounts, and then they had in the mail would come two or three account agreements, two or three sets of prospectus,
it's all
and
the paperwork.
all the
It multiplies the
paperwork.
paperwork.
It
Yes.
does. And what we found afterwards was, having that go away and just be one account, new account form, one set of prospectus, one set of disclosures. The client really then could start to understand and engage with the advisor, because when they got a 4-inch stack of paperwork, it just didn't work very well. And then it solved for a lot of operational burdens. So thinking about things like moving cash between accounts, that was one of the reasons people didn't really do what they were supposed to do. But when we put it into a single account, that cash movement piece got to be so much easier. And so
Yes.
they could rebalance portfolios and rebalance strategies in a much more effective way, solve for some real problems there.
But that's important. And then once you've done that, if you're just looking at it from the portfolio management perspective, it's important, but it needs to be tied to your billing because different models might have different fees. And then, so now your billing cycle changes, your reporting cycle changes, and so on. So this is why all of that needs to be really well integrated, correct?
Absolutely correct. So real quick, we're going to kind of turn to the horizon. And how do you see AI transforming wealth management? I mean, you talked about it a little bit earlier, and we know note taking is kind of an easy, low lift. But what's Digit's vision for integrating AI into your platform?
For us, the note taking is the very easy way.
Hmm.
The first thing, and I think it's very obvious, is that when you do AI, you now have an opportunity to create a report that is personalized to the end user. First off, today what people do is they produce a report, it's a bunch of chart, and the client has to figure out what they have to read from that report. And so they have to draw their own conclusion. With AI, you can write in words what are all the analysis that you're writing so that the person has to write the report with the chart, providing contextual information with it. The problem with AI is when you open your language model to any data outside, then it can start bringing stuff that you don't want. So when you're building that, it's making sure that you can select what is the content, for instance, a research study, a study on GDP. So like that you want to combine with your analysis to really enrich the analysis. So we see that as essentially a digit story. It's something that you can build that makes this report personalized to the end client, but where you control the inputs that are going into it. We think that's really important in the AI story. We think AI for us, stuff that people don't see is the amount of work that you have to do for operations, reconciliation, error management, and so on. All of that is being taken care of by AI. Then you have the ability to put your next action into your system that is either at a business level that you're looking at all your clients and allow you to focus very quickly on the clients that you should draw attention to, the ones that, and giving you not only you're breaching a compliance, but to say, what's the next, well, by reducing your allocation to this and increasing it to that or trading that, these are the trade that we're recommending for you to actually be now in compliance with it. So the system will change from a system that produces information to a smart system that operates on its own. And I think that's the main view of AI that we have internally. Now, in terms of connecting to client, there's so many uses of AI in terms of producing the right information, tracking track of the interest that people have, and then just curating the content to them. So you just want to send the articles that would be interested for them, or articles that are relevant to the portfolio based on the load or based on the holdings that they have. So all of that is within the realm of AI. And so we think it's going to change things, and we think it's going to elevate the conversation that advisors need to have with client, because the client will get access to a lot more information, and it will allow to have much more fruitful conversation, probably aligned around people's goals and their aspiration and so on, and a bit less on just the historical performance of their portfolio.
Yeah. No, that's great. That's great, Benoit. And I really appreciate your insights on kind of product strategy and technical innovation at Digit. It's been really valuable to me, and I hope everybody else too. And it's clear how your work directly supports the growth and the future readiness of wealth management firms. So for listeners who want to explore Digit's platform, where do they go?
They go to our website, so www.d1g1ts.com. So you just replace the I with one. We're numbers people, so this is why we did it. It's a bit of a cool handshake that for the cool kids a bit, and but check us out. And if you have any questions, don't be afraid. Reach out to us.
Gotcha. Well, thanks again, Benoit, for joining us, and to our audience, thank you for tuning into another episode of In the Money. We'll be back soon.
Thank you for listening to In the Money, the show that delivers advisors, asset managers, broker-dealers, and other technology service providers the knowledge they need to navigate this industry. Don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Flyer Financial Technologies. The content has been made available for informational and educational purposes only.